Ever get sucked into those trading ads promising to like turn 10 grand into 40 grand, make it sound easy?
Yeah.
But they never mention the risk.
Mm.
Like selling a map to a gold mine.
Right.
But forget to mention the dragon guarding it.
That's a great analogy, actually, because it highlights this whole chasing holy grail trading secrets thing. And Dr. Tharp, in Trade Your Way to Financial Freedom, he really dismantles that myth. He says the real key is actually self-discovery.
So instead of like predicting the market perfectly, you need to understand yourself.
Precisely. Most traders zero in on technical analysis, which, yeah, it's important, but they forget the psychology. They're so busy trying to find that perfect entry point, they don't see how their own biases are messing them up.
And that's where Dr. Tharp's focus on psychology comes in.
Exactly. He says even seasoned traders, they fall into these mental traps, like the gambler's fallacy. Let's say a trader has a bunch of losing trades. They might think, well, I've had such bad luck, the next one has got to be a winner.
Because the universe like owes them a win at this point.
Exactly. But the market doesn't care about your past trades. Each one is independent. What happened before doesn't determine what happens next.
It's like those traders who double down after a loss, trying to make it all back.
Another classic example, letting emotions drive the bus instead of logic or their system. And Dr. Tharp also talks about this tendency to hold on to losing trades for too long, hoping they'll bounce back, but then they sell winners too early for a tiny profit. It's like they're scared to lose, but also scared to win big.
It's wild how psychology can just wreck a solid trading strategy. You could have the best charts in the world, but if you aren't managing your emotions, you're sunk.
That's what Dr. Tharp is getting at. He says trading success is as much about mastering your mindset as it is about any technical strategy.
So how do we fight those psychological pitfalls?
That's where building your own trading system comes in. Dr. Tharp argues that instead of chasing random signals and tips, traders need structure.
So instead of just jumping into the market, you need a plan, a system to guide you through the ups and downs.
Yeah.
So how do we build this system? Is it one size fits all, or is it more well-nuanced?
That's what's great about his approach. It's a framework, not a rigid set of rules.
Yeah.
He introduces 6 things every trader needs to think about for their system. And he points out most traders only focus on the first 4. Entry, exit, trade frequency, and expectancy.
Okay, let's break those down. Entry and exit. I get when you get in and out.
Yeah.
Trade frequency. That's how often you're in the market.
You got it. And expectancy, that's the average profit or loss you expect on each trade.
So what about the 2 that Dr. Tharp says are often forgotten? Position sizing and trading capital.
Those are crucial, and he says that position sizing is the most important but least understood.
Position sizing meaning how much you're risking on each trade. Makes sense.
It's not just about what you trade, but how much you put on the line with each trade.
He has a great analogy in the book. He compares trading capital to a wall protecting you in a snowball fight.
Right. Big wall, a few snowballs, no big deal. But small wall, even one good snowball can do damage.
That really paints a picture. Makes you realize even if you're good at this, not having enough capital can wipe you out fast.
Yeah. Exactly. And that's why Dr. Tharp is all about understanding and managing risk. That's where position sizing comes in.
So instead of betting everything on every trade, you're being more strategic to handle losses.
Precisely. And that leads us to our multiples, which is how Dr. Tharp says to measure your profits and losses. It's all relative to the risk you took in the first place.
Our multiples. So it's not just about the money you make or lose, but how that compares to what you risked at the start.
Exactly. Let's say you risk $100 and make $200 profit. That's a 2R profit. Now imagine you have a system and it wins, say, 40% of the time, which might not sound amazing.
Yeah, because you're losing more than you win.
Right. But what if those wins are consistently big, like 3R, 4R, or even more?
So even with fewer wins, you come out on top because those big wins make up for the losses.
Exactly. And that's huge. Most traders miss that. It's not just about being right. It's about managing risk and making sure the big wins cover the losses you're bound to have.
So managing risk and focusing on those R multiples sounds like a really smart way to go.
Yeah.
But even if you have a system and it accounts for all these things, are there still common traps that traders fall into?
For sure. Even the best plans can go wrong. One thing Dr. Tharp talks about is confusing market setups with entry signals.
Like thinking that just because a stock looks ready to move, it's a guaranteed win.
Yeah. He tells a story about this trader who was amazing with Elliott wave theory.
So this guy really knew his stuff when it came to patterns.
Oh, he was super skilled. But get this, he'd always think an Elliott wave setup meant jump in right now. And he'd constantly get stopped out.
Because he was being impatient.
Yeah.
So focused on the pattern that he missed other signs saying stay away.
Exactly. Just because you see some clouds doesn't mean it's going to pour. You need more than that, right? Wind, humidity, maybe even some thunder in the distance.
It's about the whole picture, not just blindly following one signal. How do you avoid that mistake? Is it about waiting longer before you jump in?
Patience is key. Dr. Tharp's big on waiting for confirmation before entering a trade.
So you're looking for a few signals to line up, not just one thing.
Exactly. And this is where trade frequency and expectancy matter. If you're trading constantly, you're more likely to rush into things.
Because you feel like you need to be in the market.
Right. It's like anything else, rush it and you'll mess it up. Dr. Tharp wants traders to be picky. Focus on quality, not quantity. He'd rather see fewer trades, but with a higher chance of success in a plan, rather than chasing every little thing.
So it's strategic, not just racking up a ton of trades.
Right. Understanding your system, your risk, and how you like to trade.
He also talks about having a plan to get out right. Not just when to enter, but when to exit.
Absolutely. Dr. Tharp says people get fixated on that perfect entry point and completely forget about their exit strategy. He uses this example of someone buying 100 shares, no clue what to do if the trade tanks.
So they're crossing their fingers and hoping.
Basically, and hope is not a strategy.
Not at all. He's big on using stop-loss orders.
Huge. It's like having an emergency brake. Might not need it, but it's there to protect you.
Makes sense. So that automatically sells if the price drops too far. Limits your losses.
Exactly. Defines your risk right from the start.
Instead of letting a bad trade get out of hand, you cut it early and save your capital.
Exactly. Takes the emotion out of it.
He spends a lot of time on the different types of stop losses, too.
He does. Percentage-based, volatility-based trailing stops, which lock in profits as the trade moves your way. He really breaks down the pros and cons of each one.
That's helpful, especially for newer traders who might not know all the options.
Absolutely. Dr. Tharp says there's no one right answer for everyone when it comes to stop loss. It's about your trading style, how much risk you'll take the specific market, even how much the price jumps around.
So finding what fits you and your system.
Exactly.
What if the other side? When a trade is making money.
Yeah. That's tough for people. It's easy to get anxious and want to grab your profits. But Dr. Tharp is all about letting your winners run.
If you cash out too soon, you're limiting your potential.
Exactly. It's like planting a seed, then as soon as it sprouts, you chop it down before it grows anything.
That's a good way to put it. How do you balance protecting your profits with letting them grow?
That's where those trailing stops come in.
Right. So as the trade moves up, you raise your stop loss level with it.
Yeah.
So you're locking in profits and reducing risk.
Exactly. And he talks about other things too, like scaling out, which means selling a little as the trade goes your way. That way you take some profit, but still keep some skin in the game if it keeps moving.
Finding that sweet spot between protecting your wins and maximizing your gains.
Exactly. And it goes back to a good system and having the discipline to stick to it.
So we've talked about managing risk, having a system, understanding those psychological traps. But isn't there still this big part of finding a system that actually predicts the market well?
That's the big question, right? And this is where Dr. Tharp throws you a curveball. He says that testing trading systems can actually be misleading.
Really? But isn't backtesting, like seeing how a system would done in the past, a core part of trading?
It's common, for sure. But Dr. Tharp suggests that while historical data is useful, it can give you this false sense of security. He says markets are always changing. What worked before might not work again.
So relying too much on backtested results is risky.
It can make you overconfident. You think you found the perfect system, then you try it live and it totally flops. Dr. Tharp thinks that instead of chasing that perfect, back-tested system, traders should focus on the stuff we've been talking about. Managing risk, knowing their own biases, and focusing on those 6 key parts of their trading system.
So instead of trying to outsmart the market, it's more about knowing yourself, your risk tolerance, having a plan for different situations.
Exactly. The market is unpredictable by nature, but you can control how you act your discipline, how you handle risk.
That's a big shift in thinking. Instead of getting caught up in the hype and trying to predict everything, it's about taking ownership of your own decisions.
Exactly. Dr. Tharp's approach isn't just about charts or hot stop tips. It's about understanding yourself as a trader, making your trading match your goals, your risk tolerance, and your personality.
So what does all this mean for you, the listener? If you're tired of those get-rich-quick schemes and want to build a real approach to trading, Dr. Tharp's Trade Your Way to Financial Freedom is worth checking out. It's a book that challenges how you think, makes you face your own biases, and gives you a framework to build a system that fits you.
It's not some magic solution. It won't have all the answers. but it gives you the tools and insights to navigate the market better, with more confidence, more discipline, and a deeper understanding of what really drives success.
And maybe most important, it shows that the biggest factor in your trading isn't some fancy indicator or algorithm, it's you.
It's about mastering yourself, not the market.
Until next time, everyone, happy trading.